OPEC Plus is behind on its pledge to supply world markets with oil, and the EU to end the sale of combustion engine vehicles. You're watching the Daily Brief with Forbes. I'm Ramya Faraj. OPEC Plus is more than 500 million barrels behind on its pledge to supply world markets with oil. That's according to data from the OPEC Plus Joint Technical Committee. The deficit is exacerbating concerns about OPEC's ability to balance the global market. In May 2020, OPEC Plus coordinated production cuts aimed at rebalancing the global oil market. Since then, the group has pumped 562 million barrels less than levels stipulated in that agreement. In May alone, members produced 2.7 million barrels a day below their collective target. U.S. markets closed lower overnight as investors once again sold off shares amid looming recession fears. It came as new economic data showed that consumer confidence plunged to a 16-month low. The Dow Jones fell 1.6%, nearly 500 points, while the S&P lost 2% and the Nasdaq lost 3%. Consumer and tech stocks led the market's declines, while energy stocks were the only positive sector, with Hess and Occidental Petroleum each rising by around 5%. The EU has approved a plan to end the sale of vehicles with combustion engines by 2035 in a bid to reduce CO2 emissions to zero. The measure, first proposed in July 2021, will mean a de facto halt to sales of petrol and diesel cars, as well as light commercial vehicles, and a complete shift to electric engines in the EU from 2035. The plan is intended to help achieve the continent's climate objectives, in particular carbon neutrality by 2050. Toyota has missed its already downgraded global production target for May, falling short for the third month running as China's COVID-19 lockdowns and semiconductor shortages continue to bite. The world's largest automaker by sales says it produced 635,000 vehicles globally last month. It's short of its target of about 700,000 vehicles for May production, and it's also a 5.3% decline from the same month last year. Ernst & Young will pay $100 million to the Securities and Exchange Commission after admitting that employees cheated on CPA ethics exams for years. The firm says it had been informed of potential cheating but failed to disclose this during the SEC's investigation. It's the largest fine the regulator has issued to an accounting firm. Aisha Ambani is reportedly set to be named chairman of the Reliance conglomerate's retail unit. She is currently director of Reliance Retail Ventures. Her promotion follows that of her twin brother Akash Ambani, who was appointed as chairman of the telecom unit this week. It's seen as another sign that their father, Indian billionaire Mukesh Ambani, is pushing ahead his succession plan. Around 37% of organizations in the UAE are planning to increase their spending on AI over the next 12 to 18 months, according to a survey by International Data Corporation. Half the organizations surveyed had already started their digital transformation journey before the outbreak of the pandemic. These companies are making efforts to boost productivity through digitalized operations, enabled a hybrid network environment, and create innovative digital business models. Top golfers say the PGA Tour has only itself to blame for losing players to Saudi-backed breakaway Live Golf Invitational Series. Americans Pat Perez and Patrick Reed ripped into the PGA Tour and its commissioner Jay Monahan and said the blame for their departure lay with them. They say they didn't listen to the players and claim they were working for the golfers when in fact the golfers were working for them. Earlier this month, the PGA Tour suspended members who joined Live Golf. I'm Ramya Faraj. This is the Daily Brief. Thanks for watching. Bye for now.